Okay, welcome back to our tutorial class. So for today's we will be talking about cash budget. This is problem 3. Okay, what the difference between problem 3 and problem 2 is that in problem 3 we basically could invest our cumulative surplus first. So basically we could invest to the company. When we try to invest into a company, there's an investment rate, but also you need to be reminded that we also need have a borrowing interest. Okay, the step basically the same. First, you need to create the account receivable collection. Basically, in here, it's already given of the information here about how much sales are collected. It has a 45 collection period, so that's basically it. After you find the account receivable, the next is the payable payment here. So basically you need to know how much is paid in each quarter. It's the same step. Remember the cutoff point. Please pay attention to this because the cutoff point will determine how much you pay in each quarter. The next step is net cash inflow. Pay attention to all of this. I will explain more for the cash budget, but for the net cash inflow, I suppose you could do this if you understand problem 2 perfectly. So in the next one, we'll be talking about cash budget. So basically here it's quite complicated. The cash budget is really complicated because assume you are working on quarter 1, right? So basically you have a surplus of 38.7595. This surplus, after you calculate this, you can do what you call a short-term investment. So basically this the same amount of surplus, you put it into here, into as a new short-term borrowing, as a new short-term investment to make the cumulative surplus into zero. This amount of borrowing will give you an interest income from the receipt from previous investment. However, you need to understand that sometimes you have a net cash inflow, a negative net cash inflow, which result in problem, right? So assume that I didn't do anything right now. Basically, you have a deficit of minus 45. So you have a couple of options, but the first option would definitely you need to sold your investment. So you basically need to sold your current investment. After you sold your current investment, you see that you still run in a deficit. So basically, after you sold all of your investment, you will need to borrow money. So you will put borrowing in here. Again, what happens here is that you will have 30 and you have a net cash inflow and you still need to pay the interest. However, you can see there's a cumulative surplus here. So basically you will try to pay the short-term borrowing, and when you see that after you paid all of the short-term borrowing, actually you still have money, so you will invest more again. So to make the cumulative surplus into zero. In problem in quarter 4, basically you have a cash surplus of 52 here, and you understand that you still have income from short-term investment. Please do not forget to include that. So when you face a surplus like this, then you will invest. That's the reason why the cumulative surplus will always be zero. So what problem 3 wants to point out is that when you have a surplus, it's better to invest. So basically you will try to make your cumulative surplus into zero. However, if you have a deficit, the first thing you need to do is sell your investment first. If you still don't have enough money, then the next step would be to borrow money, which you need to understand that if you have enough cash, you will try to pay it as soon as possible. Because short-term borrowing actually bear a higher interest than a long-term borrowing. If you see here, it's 1% per quarter, right? It's around 3% per quarter, meaning it's 12%. However, if you do a long-term borrowing, it could probably only cost you for 5%. So please pay attention to that. And thank you for listening. If you have any more further question, please ask us through WhatsApp. We are always open to give you answer for the thing that you don't understand. Okay, thank you. Good night.